And now people kind of have it in their head that they have to put 20% down. Can you tell us a little bit about what are their other options? Because obviously 20% down, they don't have to put down.
For first-time home buyers, there's programs as low as 3% down payment.
Welcome to Tuesday's Tips. As busy real estate agents out in the field, we're always looking to help our community grow. Tuesday's Tips is about allowing our community to share about their businesses and promotions and providing you, the consumer, a place to find out more about what makes this community great. Hey guys, Dave Markowitz here at Dave and Etta Real Estate Team, and we are doing Tuesday's Tips today. Today we're talking about the loan industry, and we are privileged to have our very good friend and loan broker, Robert Bartolomea, with Strategic Home Loans. And we wanted to tell you, Robert, thanks so much for sitting down with us today, and you're going to give us a great education of what's happening in the loan industry for our clients who are looking to, purchase homes, refinance, whatever it is, you're the full package. I'll let Robert tell us about, options and all that kind of stuff.
But first, maybe tell us a little bit about how you got started.
Thanks. I'm Robert Bartolomea. My company is Strategic Home Loans. I've been in the loan business since 1985.
Okay.
I got out of college, San Diego State. First job, I was doing second mortgages at First Interstate Bank.
Wow.
Anybody remembers that?
Yes.
Interest rates were 15% at the time.
Wow.
Back in the early 80s, correct?
Back in the mid-80s, mid-upper 80s, and then early 90s, they went under 10%, and our phones were off the hook. We could not control all the business. It was crazy at the time. Now you think, God, if this goes over 4, people are upset. But yeah, so I've been doing that. I've been mortgage brokering since 1990. I've been on my own that long.
Okay.
And I enjoy it. You're helping people out. You're getting them into a house. They're happy. It's also you're strategizing on finding the right program for them, making it work. And it's a fun industry. I really enjoy it.
Okay. And you have a full office team?
Yeah, I have 3 other loan officers. I have a marketing person, and I have a loan processor.
Okay, fantastic.
So it works to get a good, smooth transaction for the clients. So they go through smoothly. They're kept updated on the status of their loans and what's going on, so nothing gets lost in the transaction.
Okay.
And now people kind of have it in their head that they have to put 20% down. Can you tell us a little bit about what are their other options? Because obviously 20% down, they don't have to put down.
For first-time home buyers, there's programs as low as 3% down payment. We also have a number of them that'll go 95% of the value, 5% down, and we can even do those sometimes up to $1 million. So they have worked up a lot of programs, getting very creative to help people get in with a lower down payment.
Okay.
Perfect.
So for first-time buyers, hey, I have different programs for you, correct?
Right, for the first-time home buyer, a lot of them do feel they have to have 20%. So when they're shocked to hear, they can come in with a lower down payment, and the payments are still pretty reasonable as interest rates are low.
Okay. Can you tell us about then if they're coming in, I know under 20% there's usually a PMI or a mortgage insurance that's based. Tell us a little bit what they can expect on that, because they may say, okay, great, 3% down, but they're not aware that, hey, there's this one caveat which is called mortgage insurance.
Right.
Explain that.
So the mortgage insurance the lender wants 20% down, so what the mortgage insurance will do is it covers the lender for any losses on that loan. So what's good with the PMI insurance, the price of it has really come down.
Okay.
So right now, if someone gets a house with 3 or 5% down, depending on the price range, the PMI could be anywhere from $150 to $250 a month.
Okay.
And if you keep the loan over after 2 years, you can go back and try to see if you can have the PMI removed. As long as the value has gone up and you've paid the balance down a certain percent, each program's a little different. They will work with you to remove it.
Is there a certain amount of time that you have to hold that PMI, or there's
a minimum of 2 years?
Is that a national or federal type of
It's
thing?
not a federal, it's the PMI companies are independent, and that's pretty much their guidelines.
Got it. And then after that's taken away, then it goes away and you have a standard loan, whatever your loan was in.
Correct.
Okay.
You'll just pay your principal and interest, and your taxes and insurance. You will not have to pay the PMI.
Okay.
And how's the market looking right now? Can you tell us a little bit about the market? Where is it going?
Interest rates are good. We've been on a downtrend. We're probably right now at the lowest point in about 2 years.
Okay.
The Fed has just lowered the interest rate a little bit, that has helped. And we're looking forward to, I feel, rates are gonna be going down as we're having more tariffs, more things going on. The global economy is not that great. I do feel our rates will be going down in the next year or two.
So that's interesting that you bring that up, because I remember, I think about October of 2018, us as realtors, the fear was, the story, so to speak, on the street was rates are going to go up in 2019. As we got into 2019, we saw a whole different aspect. All of a sudden, rates didn't go up, they stagnated, and then they started going down. And so this year we've seen decreases, and that's brought great, energy into the market, buyers into the market. So you're foreseeing that through the rest of the year, we're looking like it's going to be at least holding steady, or maybe even
Holding steady or decreasing, as our interest rates are tied to the fear of inflation.
Okay.
So as the economy's in check, inflation has been low. The economy of the other countries outside China, Europe, has been down a little bit.
Okay.
That keeps our interest rates low, and a lot of the economists are expecting rates to drop a little bit more over the next year.
Wow.
Okay.
So when you're talking 3.75 on an interest rate compared to 7%, 10%, it's a party.
Yeah.
Right.
Last year, at the end of
It's-
the year in December, we had a couple loans where we were at 5%, and we're refinancing them now, and that's just a big drop so quickly. Usually it doesn't drop that quickly.
How can people find you?
They can give me a call. My office is 805-496-7500, extension 210,
Okay.
or my website, strategichomeloans.com.
Okay.
Perfect.
Guys, thanks so much for watching
Thank
today's
you.
show.
Thank you.
Reach out to Robert. He's got different programs. There's programs for everyone. You may not think you can qualify.
You may be surprised.
You may be surprised. Give him a call. He's a straight shooter, and he's got a program for pretty much everyone out there if they can qualify within the,
The
parameters. So anyways, thanks for watching. Keep watching. Anything we can do to help you guys. We're here for education as well, teaching about the market, and have a great day, guys. Take care.
Bye.
Thank you.
Hey guys, thanks again for watching today's episode of Tuesday's Tips. Please reach out and follow us on all our social media.
And if you have any real estate needs, please reach out to us.
We're Dave and Etta, and we
We're
are.
the Elite Team.
Take care, guys.
Bye.